Welcome to Place and Experience. Indulge your senses with immersive game titles. Boost the excitement with our engaging promotional tools and generous network promotions. Be in control with XI Viewport Management Tool and experience seamless gameplay powered by X Platform. Enjoy Place and Experience as our partners do in over 20 regulated markets. And get ready to go big. Big play is on. Placent.
Well, there you go. Hello and welcome to another edition of Which Journalist Has the Unruliest Haircut? I am your reigning champion, Conor Mulhair, editor, of course, at Next.io, and I'm joined by senior reporter extraordinaire, the one and only Mr. Zach Thomas-Aku. Zach, how's things?
Yeah, it's going great, Conor. How are you?
I'm absolutely fabulous. I'm very pleased to have you with me today to discuss a mega emerging story from down under. We've been thinking a lot about Australia over the last couple of days because of this story that we've had emerging about BlueBet and Betr. Now, every time we mention any company called Betr, we have, of course, to clarify which one we're talking about. It's not Joey Levy and Jake Paul. No. It's the Australian Betr, led by Matthew Tripp, a bookmaking legend in Australia. And anyway, this is a deal that we've had some rumours about for the past, a year or so, apparently, or longer. But yesterday, the story was brought right back to the forefronts of our minds because, Zach, you reported on this yesterday. What happened?
So, yeah, I mean, this really came to everyone's attention yesterday after a report in the Australian financial press that there was going to be a merger between Betr and BlueBet. Betr's been the subject to M&A gossip for a little while. I mean, at one point, I think they were floated to buy the Rump PointsBets business after they sold off their US assets to Fanatics. You know, three things come and go. But what really stuck with a lot of people is that the deal's going to be imminent, it's going to be announced in the next couple of days. Following the report, BlueBet stock shot up 20%, which, as I understand it, wasn't from a particularly high base, but then it still rose quite a lot. And so
something like 30 cents a share, wasn't it? Something like that.
Yeah, so we're dealing with quite low sums. It's quite a small business, but it shot up. And in response to that, BlueBet on the Australian Securities Exchange requested a trading halt, subject to, I think it was, the phrasing was something like pending an announcement or a material event or something like that, which appeared to confirm the report. So yeah, I mean, this deal has been floated before. There's been a lot of rumors about it in the past that the two would get together. They're both led by sort of old hands, veterans of the Australian gaming. And I think one rationale that has often been floated is that companies of this size are looking to get a little bit of scale, because Australia looks set to be tightening up its regulatory environments quite a bit. There's been a lot of scandals recently. I think everyone remembers the Crown and Star saga. A lot of stuff happening on the state level. A lot of concern about addiction. Pokies are getting more heavily regulated. But in I think it was I can't remember exactly the date. Oh yeah, June 2023. There was a report, a government inquiry called the Murphy Inquiry, which recommended that the country should impose a ban on gambling advertising. Now, and then The Guardian reported, I think it was last month or the month before, that the Communications Minister, Michel Roland, has been briefed from officials from the Belgian Gaming Commission about how such a ban should be implemented. So in this environment, companies want to get together, get a bit of scale. And so that's what they're looking to do. And it's a little bit of a turnaround for Betr's own fortunes, which had two quite big investors, quite like names that we would know, walk away. That is Tech Corp, that's Matt Davies' outfit, and News Corp, which is, Rupert Murdoch. So yeah, looks like they're got something going in the end.
Yeah, so Betr's kind of moving towards its plan B, I guess, and I think it's smart of you to mention all the regulatory change that seems to be on its way in Australia, because absolutely, it's like last chance saloon now. for companies of this size. We'll get into how big they are in a couple of minutes, because they're not massive companies, as you mentioned. And yes, by clubbing together, BlueBet and Betr are, I suppose, kind of doubling their chances at becoming successful operators in the US, in Australia. Now, I don't think either of them has turned a profit yet, and I think that's the idea, is that this merger will help them to do so. So anyway, those were the rumors. Yesterday we had that trading halts, as you mentioned, because there was too much movement there in the share price, and I think it wasn't appropriate for investors to be trading those shares without being informed of what was coming. And today, this morning, it was all confirmed. So BlueBet put out an investor presentation which explained the structure of the upcoming merger and the kind of rationale behind the deal. I saw a headline earlier today from an Australian business newspaper which described this deal as the worst kept secret in the betting industry's history. Apparently, I think lots of people kind of knew this was on the cards. And I do recommend, if anyone wants to really dig deep into the detail of all this business combination, I recommend you go to the investor relations section of BlueBet's website and have a look at the presentation you set yourself. It goes to show, Zach, that this has been in the works for a long time, because there was an awful lot of detail in this presentation. It was like 75 pages of stuff, and we've got a couple of pages to show you from that coming up. But anyway, here's the core structure of the deal. BlueBet, which is a materially smaller company than Betr, is going to issue 265.4 million shares to Betr shareholders, which represents about 56.9% of the combined entity. So the majority of the new business is going to be owned by Betr's current shareholders. And the merger is scheduled to complete on the 1st of July. So it's going to be pretty quick. So there'll be no cash changing hands, as far as I understand it, Zach. It's an all stock deal. It's not going to cost them anything in terms of actual handing over of huge valuations or doing 10 times EBITDA multiples or anything like this. It's just all stock. But there will be a $20 million equity raise to help cover some of the transaction costs and funding, kind of funding the actual admin of the whole thing, I guess, and the legal fees and all of this. And that 20 million is going to be used for a few different things as well. But why might this be a compelling business post closing? Well, one of the reasons is the quality of the executive teams and that are already in place at those two businesses, and the resulting team when the businesses merge. So the combined business is going to be led by Andrew Menz as CEO. He's currently CEO at Betr. While BlueBet CEO Bill Richmond is going to become the Chief Operating Officer of the combined entity. Now, those two, I'm sure they're not, I don't think, super well-known executives. Perhaps they're better known in Australia than they are in Europe. But two of the people who are very well-known, who are involved with this, are Michael Sullivan, who's the founder of BlueBet, and Matthew Tripp, who's the owner of Betr. So Michael Sullivan's going to be joining the board as executive chairman at first, and Matthew Tripp will join as a non-executive director. That's going to continue until the 1st of January 25, so in about 8 months, at which point Matthew Tripp's going to take over as executive chairman. But Zach, just in case any of our listeners are not totally clued up on the Australian gambling sector, what's so compelling about Tripp and Sullivan? Who are these guys?
Cheers, Connor. Well, they're probably considered to be two of the the proper pioneers of Australian betting. They both separately have done a number of deals which made them both quite rich personally. So Sullivan sold Sporting Bet to William Hill in 2013 for 660 million Australian dollars. and Trip bought sports bets in 2005 for $250,000 before selling it just 6 years later to Paddy Power for 388 million in 2011, which is, I mean, that's quite a profit you made from that, and I think that is now Flutter's main vehicle in Australia. So Trip is, I mean, he's a bit of personality as well. He's the executive chairman of the Melbourne Storm Rugby Club. I think when Betr launched in 2013, they offered something like 100 to 1 odds on the Melbourne Cup, which actually led to a 210,000 fine from the regulators, because that was considered to be a little bit maybe not great.
Yeah, what was was it considered too generous? You could have 100 to 1 odds on any horse or something?
I'm not that clued up with the details, but yeah, it was something like that. It was not great.
They broke some kind of rule with it, but yeah, I think that was the point when Betr launched in Australia. They kind of came out with this quite noisy campaign. There was a lot of outdoor advertising and digital advertising as well, and yeah, mega kind of introductory offers like that 100 to 1 special on the Melbourne Cup, which I think actually did do a good job of generating a database that was kind of quite substantial, basically. In fact, let's talk about that now, because here's the broad rationale for the business. Of course, we've already talked about the fact that scale at this point in the Australian market is going to be a key differentiating factor for operators, and it's going to, you know, help them to survive into the future. But let's say, broadly speaking, there are kind of two big benefits to the merger. One is that they are going to consolidate both of their customer bases. They are convinced that there's very little crossover in their existing customer bases. We've got some figures on this, but I haven't got them in front of me, but they've each got 100,000 or a couple of 100,000 active customers. And so that's the first thing they want to do, yeah, because they said there's very little crossover, so they're going to kind of double their customer base, essentially. And they are also going to migrate Betr's operations off BetMaker's third-party technology stack. Now, there's going to be more on that a little bit later. But yeah, BlueBet has its own proprietary tech stack. And so BetMakers is going to Betr's going to move its operations onto that. So let's say we're doubling the number of customers, simplifying the operations by bringing everything in-house and reducing costs in that way as well. And there's also going to be a transition from 2 brands to 1 brand. So there's going to be additional savings on marketing and advertising. So there's a lot of synergies here. There's a lot of kind of elements that appear to make quite a lot of sense. And also, I think for BlueBet, they released some quite interesting figures on Betr's customer demographics today as part of that presentation I mentioned. So I think we've got a slide here we can show, and we'll just talk through it a bit for all of our audio only listeners, of which I'm sure there are several thousand. But we've got some figures on Betr's customer demographics. So you can see a lot of things that are kind of very beneficial to a lot of operators. So 56% of bets placed on Betr are accumulators and multi-bets. Only 44% are single bets. So obviously that's a higher margin product, which is great for driving a higher margin for the operator. They've also got a stated preference for sport over racing. So 59% of bets are sports bets compared to 41% on racing. I think in Australia, usually that skews the other way. It's a very big racing country. And perhaps most importantly, 56% of Betr's customers are aged between 18 and 35. So obviously, if you're able to generate that brand loyalty and that kind of relationship with customers at a younger age, there you go. That says there towards the right-hand side of the screen, spend per customer grows with customer age, compounding the benefits obviously, of having those customers. So thanks for showing that image, Lorena. That's pretty compelling stuff, I think, in terms of the benefits to BlueBet. And yeah, there you go. So as I mentioned, they're going to transfer everyone to a single brand. It hasn't actually, I suspect, because BlueBet's got the tech and Better's kind of got the customers. Broadly speaking, I suspect it'll be Better that is the brand that survives, and BlueBet, it's also got a kind of more modern, sleek, cool kind of vibe to it than BlueBet, which seems a little bit, I don't know. Do you agree, Zach? It's a little bit old hat, maybe. Looks a bit dated. Things.
I was thinking that it seems a little bit old fashioned, but I don't really know much about marketing, so I'm not really one to criticize.
Just looks a bit 2005 to me. I don't know. Maybe people disagree, but I suspect it's the Better brand that will survive. But let's see. And yeah, all those synergies and all that money, and we've got this equity raise that we'll tell you a bit more about in just a second. These are all kind of pillars of growth. We've got another picture we can show you here, another slide from that presentation where you can see the 5 pillars of growth that are going to come about through this merger. So you've got the value of the combined customer base, BlueBet's scalable technology platform, the experienced leadership team, the access to capital, which we'll come on to in a second with this equity raise, and a significant market opportunity. Now, there's a pyramid here which shows right at the bottom lots of different operators with small scale. And then at the top, you've got 3 operators who've got a market share of above 15%. And BlueBet thinks there's an opportunity for an operator to come in with that 10 to 15% market share kind of size. So thanks for showing that, Lorena. Obviously, as we know, Australia's a huge betting market, and I think per capita the biggest spenders on gambling pretty much anywhere in the world. So if you can capture 10 to 15% of that market, then that's a recipe for success. I saw a figure somewhere earlier that estimated that these brands have maybe got 1 or 2% market share each at the moment, and they obviously want to really expand that by merging together and hopefully reach that kind of 10% point. Now, I mentioned earlier, Zach, that no cash will need to change hands between the businesses. It's going to be an all-stock kind of deal, but they are planning an equity raise worth about $20 million. And I think you've been looking into this. Do you want to tell us a little bit more about how they're going to do that and what they're going to use the money for?
Yeah, no problem, Connor. Maybe just a little word on the scale question, because that's something we mentioned before, where they're aiming to go to 10 to 15%, maybe to, for all the benefits of scale, along with to cope with this regulatory pushback. If you think about some of their competitors in the market, some of the big people there, like they've got Flutter, they've got Entain, they've got Tabcorp, like Flutter and Entain, particularly big international operators with very deep pockets who have now gone through periods of regulatory transition in other markets. So I imagine for operators of like Better size, this is a little bit existential. And so this is probably why they went through the deal. But yeah, I mean, as part of the equity raise, they're undertaking a full underwritten institutional placement to raise gross proceeds of around 20 million Australian dollars. So these will be used for growth initiatives, transaction costs, and one-off integration and migration costs. So of that 20 million, 12 million is going to be used for the actual growth stuff, which is can be distributed in a few different projects. So targeted ad spend to aid migration to the single platform, generosity to maximize engagement around the Spring Race Festival, which is coming up, a reactivation campaign focused on the casual customer base, and investments in product innovation. So, and then they're going to earmark 4 million for transaction costs and synergy realization costs. So that's where the money's going. They're also planning to do some M&A at some point, they said, but we don't really know what form they'll take.
Yeah, I think unless you know what's the inner workings of BlueBet's tech stack, it's probably hard to see. It would seem to me it would probably be back-end product things, or maybe not payment solutions, but reg tech or something like this, where it's just kind of improving their operations a bit and maybe pushing the margins up or something like that when it comes to M&A. I don't see them buying another B2C brand and integrating that, but who knows? Could happen. Stranger things have happened. But yeah, absolutely. So they're going to spend that 12 million on basically, let's face it, advertising and marketing. That's what they need to spend on. They need to make people aware that the brand's emerging and get everyone migrated and make sure they don't kind of churn those customers out by bringing the brands together, because there's always a risk of that. And yeah, I think the thing about Betr is they kind of showed, I think that everyone was talking about them for a little while when they had that 100-to-1 offer that we mentioned before. And it does seem they were quite effective with their marketing spend. I think they were able to make quite a big splash at a relatively low cost. So hopefully they keep that up and they'll be able to turn that 12 million into, real results, because obviously it's not a huge figure. It's not going to last forever, but hopefully it's enough if they use it quite intelligently. So what's the result going to be? Well, they've given us some projections for 2024, as well as some results from the latest quarter, so calendar Q1 of 2024, which, just to confuse matters, is Q3 of financial year 24 in Australia, but whatever, let's just say the latest quarter. Between them, the business has generated just shy of $40 million in net win. So that's kind of net NGR, I suppose we would call it, from about 400 million in betting volume. So the scale's not tiny, we should say that, 40 million a quarter, 160 million a year. It's not to be sniffed at. It's certainly not insignificant, but obviously it's much smaller than some of their competitors in Australia. Anyway, the combined business is expected to reach EBITDA profitability for the full year 2025. But we're talking about financial year 2025, which starts in July this year. So anyway, I think the point is they expect to turn an EBITDA profit pretty quickly, basically within the first 12 months post-merger. And there's an additional potential upside for the combined business. Apparently, that Betr's margin might be brought towards being more in line with BlueBet's margin. I wonder if Betr's margin being lower is caused by the fact that their technology is provided by bet makers instead of in-house. Anyway, Betr has a margin of about 8.5%. Or it did have in the latest quarter, and BlueBet's was 11.4%, so significantly better. And there you go. So that's pretty much all the story of Betr and BlueBet and what's going to happen to them. But there is one knock-on impact of this, and something we've alluded to a couple of times already, and that is the impact on bet makers, for whom I believe Betr is quite a significant important partner. But I think we may, before we chat a bit more about that, I think we have probably a very quick video message to play.
Teams, hundreds of studios, dozens of Hub Market partners, an industry-leading Hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
There we go. I thought we might have a video, and we should, of course, say thank you to Hub 88 and to Playson for sponsoring this episode. So, Zach, you've been looking into bet makers and what they've said today about all this, because they did release a statement, didn't they? And they've kind of given us some idea of what's going to happen next for them. What's the story there?
Yeah, I mean, they put a pretty brave face on it, and there's a statement out with like a quotes from the CEO, Jake sorry, Jake Henson, that's right, and Matt Tripp, where they're all saying this is all good news for everyone. Matt Tripp saying, I'm going to remain an investor, but I mean, like losing one of your biggest customers who's decided your tech stack isn't going to meet their needs can't be good news for any business.
Mm-hmm.
According to the reports in the Australian financial press, Betr has previously struggled with the quality of the tech stack. That's been a big issue for them. And yeah, I mean, so the agreement they came up with between Betr and BetMakers is basically for BetMakers to support Betr for the duration of the customer migration. Mm-hmm. So that's a couple of $1 million in installments, and then if the migration isn't completed by October, Betr will pay an additional $500,000 per month. I mean, so yeah, I mean it's a little bit of money, but not as much as probably as an ongoing relationship would have been. So Jake Henson said, the end of the partnership will allow the business to realize some cost efficiencies and deploy resources to the rollout of its next gen platform, which is where they're putting a lot of their eggs going forward. And he said he's reiterated that the company still expects low double-digit revenue growth for full year 2024, and is confident of growth ahead of this. So I mean, who knows how they'll do? I just think as much as they're saying no, we can do something from this, isn't the end of the world. I think it is bad news for BetMakers.
Yeah, I'm just googling quickly their share price. Down 10% today. Not looking great. Investors perhaps not very happy. I think we saw some big VC partners kind of pull their money out of BetMakers as well over the last year. So they're not. Look at this. Yeah, they used to trade in 2021. They were trading at $1.50 a share at their peak, and today they are 10 cents. So they started off as worthless, essentially. No, it started off at 17 cents a share in 2015. Huge spike up to 150 by 2021, and now just all the way back down again, just to 10 cents a share. So,
that was some of the the COVID era sort of excitements about online gaming, but and
a big pump and dump, it seems, between 2020 and 2022. Pretty crazy valuations.
I think in the feverish world of Australian M&A gossip, they were at one point floated to buy Betr. They were one of the everyone was offering to buy everyone at one point or another. But BetMakers was, I think, going to buy them at one point. But that's rumors and not really proper sourced stuff.
No, just chit chat, and there's never a lack of that in our industry, Zach. There's always rumors that's spreading around, but we are here every week to help you separate the fact from the fiction. Isn't that right? And what a wonderful place to sign off. What do you reckon? Anything else to say on this story today?
Well, that's kind of all of it. BetMakers also announced an acquisition as well, Race Labs Global Assets, which is sort of a racing tech provider. It's quite small beer, really. It's like 1 to 1.5 million, depending on customer innovation. But yeah, I think that's. I think apart from that, that's pretty much all I've got to say on the topic.
Yeah, good point though. And it was funny that the two stories came out on the same day, so it's kind of as if BetMakers was saying, "Okay, everyone, we've lost a client, but listen, we've got a new business. We're bringing it on. We're acquiring this racing data betting business, whatever it is." But there you go. If you want more detail on that, there will be more to follow on next.io, because we are always keeping you up to date with the biggest headlines and the biggest stories. And of course, we'll be back here at the same time next week for more of the biggest stories from the online gambling sector. Zach, we say what a pleasure it's been to have you with me this week. Thank you very much for joining me. Thank you to everybody in the audience for watching. Thank you once again to Playson and Hub88. Thanks to our producer, Lorena. And why not? Thanks also to me. We'll see you all soon. Take care, everyone. Thanks, Zach.
Thanks.